All right, let's get right into it. Today, we are diving deep into one of the biggest and, let's be honest, most controversial topics in the trading world, smart money concepts. So is it the secret code that unlocks the market, or is it just old wine in a new bottle? Let's break it down.
Check this out. This quote from a trader on Reddit really gets right to the heart of it. You've got one trader looking at a chart and they see a simple, classic pattern, a bullish candle at a support level. But the SMC trader, they see a whole dramatic story unfolding. Institutions manipulating the market, grabbing something called liquidity. The crazy part? They are looking at the exact same chart.
So that's our big question for today. What is really going on here? Is one of these traders seeing a deeper truth that the other one is totally missing? Or is this just two different languages trying to describe the very same thing?
To really figure this out, we have to start with the story, the powerful narrative that Smart Money Concepts, or SMC, tells about how the market works. And trust me, it's a very, very appealing story, especially if you're a trader who feels like you're always one step behind.
See, the whole idea behind SMC is that the market isn't just random noise. Nope, it's a structured game. And in this game, there are only two players. You've got the smart money, the big banks, the institutions, and then you have retail money. That's us.
And here is the promise, the big hook that pulls everyone in. SMC claims to be the secret map to this game. It says it can teach you how to see the footprints of the big players on your chart, so you can finally stop trading against them and start trading alongside them.
Okay, so if you want to read this secret map, you've got to learn the lingo, right? SMC has its own very specific, very unique vocabulary. So let's quickly decode a couple of the most important terms you're going to hear. First up, liquidity. Think of liquidity as the fuel that makes the market engine run. It's basically all the stop-loss orders that traders like us place above recent highs and below recent lows. The SMC theory says that the big institutions have to hunt this liquidity. They have to trigger all those stop-losses to get enough volume to fill their own massive orders before they launch a major price move.
Next, you have order blocks, and these are supposed to be the literal footprints left behind by the smart money. An order block is simply the last down candle right before a huge rally, or the last up candle right before a big crash. The idea here is that this is the zone where institutions were busy building their position, and price is very likely to come back and react to that same area later.
And finally, this is how SMC traders read the overall story of the chart. A break of structure, or BOS, is when price makes a new high in an uptrend. That's the green light. It confirms the trend is still strong. But a change of character, or CHOCH, that's the first red flag. It's when an uptrend suddenly fails to make a new high and instead breaks a recent low. It's a warning shot that the entire trend could be about to reverse.
But once you learn the language and start applying it, some questions naturally start to pop up. Are these really brand new concepts, or are we just putting fancy new labels on ideas that have been around forever?
And this brings us right back to square one, doesn't it? The big debate. Is the SMC story a genuinely deeper insight into what's happening, or is it just a super complicated, dramatic narrative wrapped around a simple classic price pattern, like a bounce off a support level?
This comment really nails the skepticism that a lot of traders feel. They hear order block, and they think, wait a minute, isn't it just a supply and demand zone? They hear liquidity sweep, and they say, you mean a stop hunt? We've been talking about those for decades. It feels like reinventing the wheel.
So, what if we're asking the wrong question? Maybe the point isn't whether SMC is right or wrong. What if the key to understanding why these patterns seem to work has less to do with the market itself and more to do with psychology, our psychology? This brings us to a fascinating idea, the self-fulfilling prophecy. Think about it. What if these smart money levels work simply because a huge number of traders now believe they will? If you have thousands and thousands of traders all identifying the same order block on their chart, and they all place their buy orders there, well, their combined buying pressure is what actually causes the price to bounce. The belief becomes reality. And what about that whole liquidity hunting idea? Well, it turns out there's a real-world academic concept for this called predatory trading. It describes exactly how sophisticated, informed traders can, and do, take advantage of other market participants. So, for instance, if they know a big fund is in trouble and has to sell, they might jump in and sell aggressively too, pushing the price down even further just so they can scoop up those assets at a massive discount. Sounds an awful lot like a liquidity sweep, doesn't it? But there's another huge psychological trap at play here,
and it explains why these kinds of strategies always look so good from the outside. It's a powerful cognitive bias that basically guarantees we almost only ever hear from the winners.
It's called survivorship bias, and it's super simple. It just means we focus on the people or things that survived some process, and we completely ignore all the ones that failed because, well, they're invisible. We only see the success stories.
And you see this everywhere, right? The trading course website shows you 5 glowing video testimonials, but it doesn't show you the 5,000 people who took the course and lost money. We all hear the stories about Bill Gates and Mark Zuckerberg dropping out of college to become billionaires. We don't hear about the millions of other dropouts who, well, didn't. It's the exact same thing in trading. We see the flashy SMC gurus on Instagram, but the 99% of traders who tried it and failed are completely silent.
So, if SMC isn't the holy grail, if there is no secret map, then what is the real edge in trading? This is the crucial turning point. This is where we have to stop looking for secrets in the market and start looking for answers in the mirror.
And I gotta tell you, this is a massive mindset shift for most people. A good trade is not about whether you made money. A truly good trade is one where you followed your plan to the letter. Think about it. A trade where you followed all your rules but took a small, managed loss? That's a great trade. But a trade where you broke all your rules and got lucky with a win? That's a terrible trade because it just reinforces bad habits that will eventually blow up your account.
So how do you actually do this? You become a professional athlete. You review the game tape after every single trade, and your review needs to cover these 4 pillars. Number 1, system quality. Did I actually follow my rules? Be honest. 2, execution quality. Did I click the buttons correctly? Was my entry and management clean? 3, behavioral quality. What was my headspace? Was I trading out of fear, greed, boredom? And 4, market fit. Was my strategy even a good match for what the market was doing that day? And when you start doing this, everything changes. Your trading journal stops being just a boring record of wins and losses. It becomes this incredibly rich data set, not about the market, but about you, your habits, your discipline, your psychology. That's where the real, lasting edge comes from, not from the next magic indicator.
So, in the end, maybe it doesn't really matter what you call it. Support level, order block, who cares? The most important question you can ever ask yourself as a trader is this. When you look at your charts, are you really seeing the market, or are you just looking into a mirror that's reflecting back your own biases, your own hopes, and your own fears? Answering that question, that's the real holy grail.